Good morning, guys. Welcome to this Tuesday, March 11th. And overnight is stronger than yesterday, that's for sure. We're still kind of hovering at the low end of the range here. So yesterday was a brutal day for sure. And you can see we were down. We closed that gap from that rollover. That whole gap was closed, and they probed all the way down here to the 55.50s. And so that's it almost felt like a capitulation of the markets, but it wasn't quite that panic selling you would see, but it felt pretty darn gnarly for a while there. Now the news this morning is pretty much non-existent. We had a small business optimism index came out at 6. That was pretty much as expected. Job openings coming out at 10. And that's about it. We have a 3-year auction at 1. So that could be important. They have been funding a lot of the debt with the short-term paper. So a 3-year auction coming up here at 1. But it is not a whole lot of news to drive the market today. Tomorrow, though, we get the CPI number. Thursday, we get a PPI number. Both of those could potentially move the market a bit. And we'll see how that comes out. But at this point, though, I think the bigger news is just this algo selling, which is risk off kind of dynamic, which is going on. And uncertainty, tariffs, you name it, all the stuff which is happening, changes, adjusting the economy. It's had people freaking out, or the market's freaking out. I'm not sure if people are freaking out, but the markets are freaking out. So we'll see. I think I mentioned this. I'm not sure if you remember, but back in October, November, before the election, and that if Trump won this election, chances are we're going to see a sell-off, contrary to what you would think, right? Because they're very likely to turn off the money spigot, right? That was the argument, and not so much just because he won, but because they're going to turn off this free money spigot, and that's what they're doing now. And I think that could be part of this whole freak out as well. That a lot of money is being just pouring into the economy and finding itself into the stock market, propping up asset prices. That's my little theory. I think that has some relevance to it. It's kind of counterintuitive, but now let's see what's going on now. It kind of came to mind again. The first couple of months of the January, February was still trading higher in a big way. So I kind of put it on the sidelines. Say, well, maybe it's not going to happen after all. But here we go. Money spigot gets turned off. Market starts freaking out, and here you go. So anyway, at this point, though, that's a little side note. But at this point, I think we're starting off this still with a bias to the downside. The overnight shows a little bit of strength, so I would probably look for early strength to try to get short against some of these upper levels and see if they can take those out, especially if they can get up above this area, the 57.30s. That's going to be key. So I'm going to be looking for short setups all the way up to that level. If they can take this level out and start trading above it, at that point, I would take off the short bias and start thinking maybe we have some sort of strength coming back into the market again. But watch that level right there. On the way up here, it's we have a little bit to lean against. We have this 56.70s. We got the lower end of this range at 57.20s. 57.30s is the one to pay attention to, I think. So not I wouldn't say we have a whole lot to work with on the way up here, but a few levels. Watch that 57.30. That's the one to key in on if the market is going to have some sort of a recovery, right? So that's the way I'm looking at it right now to get started. And let me see here, 57.30. You can drag this up a bit. It's even outside of the range. So we got levels here. Trying to looking for short setups against the 56, I would say 56.50s, and it looks like they just rolled up here before I actually did after I did the levels. It's funny. So they probed up here above that 56.45 to 50s, a little bit higher, so you can probably include that in your edge, the 50s. So looking for short setups against this edge, against the 56.70, 75, against the 56.90s, 57s, 57.10s, and if I keep going higher, 57.20s, 57, It snaps back again. So it's just too far outside of the range. But basically up here, that these two areas, 57.20 and 57.30, if they can take those out, I think we are back in action again. But they had to retrace the whole day from yesterday and then some for that to happen. So that would be a good day, at least a nice potential reversal day. So there could be long trades in this move to the upside. There's so much range. So if it starts taking out resistance here at the 56.50s, there could be a nice long trade up here to the 56.70s, up to the 56.80s, or 56.90s. But I would be watching these. I would look for short setups against these resistance areas on the way up, and maybe hopping on a long trade if it looks like a little bit of a intraday rally going on. So starting off looking for early strength and then given the overnight to see if they can push this higher. If not, they start taking out that London low at 56.20s or 15s, 56.15s. If that the overnight London low here comes out, I would take off that any attempt to take this higher and start looking for the bears to kind of lean in on this. So starting off looking for that early strength. If we don't get much of it, then they start running it down here, taking out the 56.30s and 56.15s. Both of them comes out. I would just lean in on the short side and look for a move to the downside. Not going to be very aggressive at that point on that 56.05s, the 55.90s, or the 55.70s at all. And there is much more range on the downside. They took it all the way down in the overnight. They extended a little bit down here to that 55.60s. Or 55 to 60s. So they probed down here in the overnight pretty good right from the get-go. So that felt like leftover selling from the close, and then they started retracing from there. So that strength is still with us. So they've been retracing from that low all the way up here. So that's why I'm looking at that early strength to get started, see if they can keep this going or not. If they can't, if this resistance area, the 56.45 to 50s here holds, and then just stay range bound, bias to the downside. Just look for moves to the downside at that point. Looking for maybe for a retest to the lows. Still super volatile, so you just had to be cautious trading it. Look at that. It's like absolutely fell out of bed here. Boom. Right back down again. So just look for this crazy volatility. These last bars, 33 up to 40 to 10-point bars in the overnight. Like it's just moving like that. So yes, just trade it with a bit of caution. Watch for that low, the 56.15s. If the trade below it, just stay on the short side. Take off that early strength approach. But if they can hold above this, we may see some early strength to get started and see if they can try to retrace this a bit. But who knows if they're done selling or not? If they're going to try to push this lower. So once you get to this point, I mean, it's they can certainly push, and it's. Try to shake out the weak positions and really get people to capitalize, and just kind of throw out their hands and get out of things. And exactly then is when everything turns, as you know. So that's why you don't do that. But even if it's ugly to watch your 401k right now, there's not much you can do it. If you're not actively trading it, then just let it sit, you know. Looking at the bonds and NASDAQ. Bond market, it took a little pop to the upside here in the overnight early on, they're right back down again. So they're down here at this attractor area again. So bond market reacting very little anxiety, I would say. So they're pretty much in the range. They probe to the upside, they're back to value. And looking at the bond capital flow, you see they're trading around about this high volume area at the 17, 15 to 20. So that's where they are. I would just start off range bound again. And now we have an upper edge here. So if it starts trading above the 118.10s, I would start leaning in on the long side. If it starts trading below that 117.08s, I would start leaning in on the short side. So they're going to buy against support, 17.16s, 10 to 12s, 7 to 8s. They're going to get short against 30s, 17.30s, 18.06s, 18.10s for rotations back down. And if they trade outside of that range, I would just look for a potential direction, right? That's the way I'm going to approach it. And here you can see NASDAQ also showing some signs of getting hammered here right now. So, but we are still holding above that London low. So Nasdaq is also one of those which are in a crazy territory. They probability took out the 20,000. That was the key. They had to hold 20,000, right? If they didn't, bets are off, and they have been down almost down to 19,000. Look at that in the overnight, 19,000. That's pretty freaking awful. So 19,000, almost 1,000 points there. So we they opened up here. We closed around in the 470s. We've been down all the way down here. And I was watching this in the overnight. Said, yeah, this doesn't look good. 140s is as far as it went. And since then, they've been kind of buying it up again. So pretty good overnight strength. And I would say that if it sticks with us, if they can hold that 410, 400 to 410 support area, the London low, I would stay looking for that early strength. But if they can't, if it starts trading below it, just look for moves to the downside and maybe retest of this low. So they may take out 19,000, who knows? So it could be a pretty good move to the downside. So at this point, looking to get long against the 470s and 410s. That would be the only ones early on. But I'm looking for that early strength for a move to the upside and see if they can take this higher. This last little move right now, which happened, kind of threw that off because we were trading right here at the highs, kind of pushing it. But if they can start retracing, and on the Nasdaq, we're looking at the 20,000 level. So, and then what you can do if you keep snapping back on the profile as a little trick, you can turn off the disable autos and disable centering. It allows you to scroll it back up like this, so it doesn't snap back all the time. That snapback feature is just to make sure you keep your last price on the chart. But say we start trading higher, if you can get up above that 20,000 level, I would be more inclined to look for a little bit of strength. But I would be looking for short setups all the way up here against these resistance areas. And I should have taken some of those off there. This guy's here, that's nothing there. And this level here, that one is fine. This one can go up a tad. This is okay. So this guy, see, I didn't do these guys. Let me see. Take these guys off, and we'll combine that to this and make this one going to be a good level right there. So there you have it. So looking for short on the way up here, but if you get, I know who knows if you're going to get this far to the upside. It just depends. If you get a nice little rally going, yeah, we can get back up here today, but chances are we're not. So at this point, but you never know when it turns either. So I mean, at this point, I think that the uncertainty is still there. So you're probably going to see volatility and range, and you just have to try to trade it with some caution. But on the way up here, there could be some long trades running it from level to level. So 570 up to the 630s, up to the 730s, potential levels for short setups. But there's range in between. So if they start running, there could certainly be a long trade in there on the way up. But I would be looking for shorts against these resistance areas all the way up to the 20,000s. So, well, starting off, and at this point, so if you wanted to start snapping back again, then you go back to profile and enable centering again. That's how you do it. So both ES and NASDAQ looking for early strength to get started. And if we don't see it, just stay on the short side. If you do see it, maybe a couple of long trades on the way up, but still looking for short setups against resistance until they take out the 20,000s on the NASDAQ or the 5730s on the ES. Now, oil and gold, not much to say about those two, I think. It's they've been pretty much just trading in a range. So gold is just back in this range, traded right back up in this range again in the overnight. They probed here yesterday to the downside, and that sell-off, they were selling off as well, kind of counterintuitive to an extent. And it's kind of messed up that thing too, huh? Yeah, these two should be like this. It's just this lower edge like that. So on the way up here, they after they took out the 2900, it went back range bound into this upper range and pretty much sitting here right now. So I would just start off range bound, same range as before. Look to buy weakness down to the 2900, 2895s. Look to sell strength. Oh, I didn't mean to do that. Put in that extra little line there. Come on, there you go. So And on the way up here, you're going to get short up to the, you're shorting the, I would say the 29, 26s, 29 to 30s, 35s up to the 39s for rotations back down. So looking for early strength on gold as well, see if they can take this higher. But we are back in that upper range again, so I would just trade it as such, right? Trade it as a range bound market. All right, let me split this Y period out like so. So that's gold, just back up in that upper range. And oil, okay, trading back up again. So retracing a little bit. It's not going to go straight down, that's for sure. And so they are kind of settling in with a little bit lower range than we had before. Capital flow chart on that guy looks like this. And they are down here now, building value right at the lower edge here. So you can see how they're setting up nice distribution, orderly move to the downside, slowly grinding lower. And they're going to trade up and test these upper edges unless they take out the 68s. Not going to worry about the long side. That's going to look for short opportunities up to that 68 level. And then for rotations back down again. And on the way down, not going to be super aggressive on the long side, but definitely looking for buying opportunities, especially when it gets down to the 66s here. So 66, 65, 60s, and the 65, 20s. Also probably the better long opportunities. Just be a little bit cautious on those because when it's down there, and if it's extending to the downside, you don't want to be caught in a bigger move to the downside. So just so buy with a bit of caution buying those support areas. But as you can see, it's pretty range bound, but the net is it keeps getting to the downside. It keeps slowly grinding there to lower prices. And again, looking for that 40-50 range. That's kind of the where I think they want to take this. All right, so that's oil and gold. So both oil and gold range bound, I would say, to get started. Back to the ES, and at this point, okay, so a nice little move down there. It's now traded back up again. So volatility rules. That's why I've been sitting a little bit on the sidelines, not being super aggressive about it. I just had to be a little bit cautious. When you have big bars like that, you had to have perfect trade location to kind of get it. Well, not perfect, but you're pretty close to perfect, so you don't get just flat out shaken out of it. So just trade with caution. But we'll wrap it there for now. So good trading. And I will see you back at 11:30 for the next update. All right. So good trading, and I'll see you back then. And only news we have today is that Jolt report at 10. Alrighty. See you back later.